The background of managing personal finance. Personal finance refers to managing your finances as well as investment and saving. It also influenced by individual goals. Being financially smart is crucial if you want to maximize your earning and saving, since it will enable you to distinguish between good and bad advice and make wise financial choices. There are five components of personal finance, which are income, saving, spending, investing, and protection. Income is the total amount of money you receive that you can use for expenses, saving, investment, and protection. Everyone should make an effort to save enough money to cover large expenses or emergency. Everything that a person spends their money is on expenditure. These include rent each month, food costs, travel costs, and other costs. Being able to manage your spending is a key aspect of personal finance. People must make sure that their expenses are less than their income. Investing to boost a person's wealth above and beyond their initial investment. Nevertheless, investing does involve some risk because not all assets improve in value and some might even experience losses. Last but not least, protection refers the steps of people take to protect their asset from unexpected events such as disease or accidents. Planning for your estate and retirement as well as your life and health are all forms of protection. Next is insurance planning. It is a contract that represented by a policy, under which a person or businesses receive monetary security or loss compensation from an insurer. An insurance policy is used to lower the risk of any financial loss. No matter how small that could come from the insured legal responsibility for damages done to third parties or to himself or his property. Example, for a fast food restaurant, it needs insurance for food-related injuries. Distributors are informed of this risk, but they must be prepared in case of something goes wrong. It's important to know how insurance works before making a decision. Insurance policy usually have a monthly payment. The insurer bases rates on the company's operation, risk profile, and wealth. So for example, if you drive carelessly and own many luxury cars, you may pay more for car insurance than a good driver who drives a moderate car. Insurance provider may charge various prices for the same product. Thus, getting the right price will take some work.
There are many factors in managing personal finances. We can create small savings from any excess money that remains after all necessary expenses. Even a tiny amount of income can be set aside as savings. This will eventually assist the person to create a solid and also secure their financial future when they won't need to rely on somebody in the future. Next, the finance side of saving money is that it can generate more money. To maximize their earnings, people can also seek the help from any professional assistance. Then, by managing personal finances, it helps people to finding the ideal balance between income, expenses, savings, and also investment. It enables to set aside the money for enjoyable costs and reach to the point where people can accumulate wealth. Risk management is done through insurance. Insurance can safely invest our money so it can expand and pay out when a claim is made. Insurance policy will assist in covering the cost of future medical care, hospitalization, and also related costs. If you pass away in the future, it will help your family in maintaining their quality life. Insurance claiming can help to offset the family's financial losses that caused by untimely demise of family's primary source of income. Even after going through financial crisis, with insurance planning you can still accomplish your goals. The importance in managing personal finance, it helps in managing our incomes. You will either spend more than you need or buy things that you don't really need if you don't have any strategy and planning for your money. By managing personal finance, it can guarantee family savings and also their financial securities. Next, it also makes us more understand about our finance. We can make smarter decisions and worry less about wasting and debts when you have budget in a place. The most well-known financial tool that saves family and promotes further economic growth is insurance. By planning to invest in insurance, it can give peace of mind to each of your clients. If you have life insurance, this can save your families from having to leave the house. After a negative event throws your life costs, insurance can help at least in part. Other than that, insurance helps in generating long-term financial resources. Through this collection of policyholders, the insurance industry makes money. It enhances the prospects by stimulating capital formation in the economy.
Met Malaysia issued an Amber Notice on December 17, 2021, which quickly advanced to a red alert, the highest level for the Klang Valley, Selangor, and the surrounding states. The area had a 4-day downpour that was equivalent to a month's worth of rainfall. By the 8th of December, floodwater in Taman Sri Muda Shah Alam had reached hip level as 4 rivers in the vicinity of Kuala Lumpur overflowed their banks. By December 20, some roadways in the centre of Peninsular Malaysia were underwater and impassable. Taman Sri Muda had rooftop floodings in many of its single-storey homes. In other locations, floodwater rose to a height of 4 meters, and a downpour submerged 95% of the region. Although Pahang had flooding at the same period, it was covered in the media for less extensively than Selangor. Social media posts frequently pleaded with viewers to pay attention to Pahang as well, regretting that much of the media's presence was in the Klang Valley. Simply said, these are financial competitions. It is impossible to quantify the intangible effects on the individuals who suffer. Losses like those to places or things with historical, cultural, or sentimental worth are irreparable, and some of these lead to identity loss or a corresponding diminution. Although the effects on agriculture have been evaluated, they might not take into account the value of arable land, which is frequently destroyed by debris, mud, and landslide, or becomes waterlogged during floods. Particularly when work is interrupted as families try to rebuild and salvage what's left of their homes. Poorer neighborhoods suffer more than wealthier ones. Neighborhood shops and any accompanying store or equipment may be destroyed when expenses are paid for home repair and the restoration of revenue sources, making it extremely difficult for people to rebuild their life. According to a Department of Statistics Malaysia's special report on impact of floods in Malaysia 2021, the floods that struck many Malaysian states in late December 2021 and early January 2022 resulted in total loss of RM6.1 billion. Over the past few months, flash flood in Malaysia has destroyed a lot of property and killed many people. More flooding is unavoidable as the year-end monsoon season picks up in December of this year. Due to the increase in consumer awareness of the hazard of property and asset destruction brought on by recent flash flood, the take-up rate for flood insurance under Motor Comprehensive Insurance more than quadrupled in the first half of 2022 to 12% from 5% for the entire year to 2021. The take-out rate for fire material damage insurance, in contrast, gradually increased to 31% in the first half of 2022 from 30% for the entire year 2021. The Great Malaysia Flood in December amplifies the increased risk that Malaysia confronts as the effect of climate change worsen. According to a research by Malaysia Re on Malaysian Insurance Highlights 2021, Malaysia may be more aware than even before of the risk, yet they still overestimate how serious it is. Exclusively a small percentage of business and individuals are covered, and sometimes only in areas that are tough to be flood prone, making insurance penetration still low. This survey was made by Ringgit Plus based on a stratified sampling of 1,518 respondents from a total of 3,033 respondents. The data were provided. Data from 3,033 respondents were funneled based on demography to obtain financial sentiments representative of Malaysians across demographic and strata, age, income, and location. Then a sample of this opinion was taken. Table 1 shows less than 500 is saved by about half of Malaysians each month. Table 2 shows the top 3 motivations for saving among consumers today are to cover emergency 63% and retirement 43%, as well as travel 40%. Table 3 shows consumers most frequently save for retirement through EPF 84% as opposed to saving or fixed deposit 68% and unit trust or mutual funds 54%. Table 4 shows the most popular type of investment currently owned by consumers is a unit trust 42%, followed by stock 30% and private investment funds 23%. Table 5 shows the Malaysia life insurance market that has been surveyed by Global Data. As we can see, they predict that there will be an increased percentage of people taking life insurance by 2025.
Harold Pollack, a University of Chicago professor, famously condensed the fundamentals of good personal finance onto an index card. Save early and automatically. Saving 20% of your income overall reduced to 10% to 20% based on research realizing that many people simply cannot save a fifth of their income. According to the Federal Reserve's 2014 household survey, roughly 47% of respondents said they could cover a $400 emergency expense without selling something or borrowing money. So, begin saving for retirement. Consider putting money aside for an emergency fund. Set allocation and diversity. According to the research of numerous finance professors, asset allocation rather than selecting the right security or the right time to invest in the right market accounts for the vast majority of the long-term returns. Stop loss protection in bulk. The insurers assume responsible when the total amount of the claim for all employees reach a certain threshold. Aggregate stop loss insurance protect the employee from large total health care claims. And for example, 125% of the total expected annual claims attachment point.
Conclusion for financial management is an important part of financial planning. When managing personal finances, having a clear objective and knowledge about one's finance is an essential part of creating a workable plan that is right for you. Managing personal finance statement, we can learn that managing personal can help in saving our money in future, especially for emergency case. With this plan, we also know how to manage our financial properly because it can lead us to be a successful person and to be avoid us from bankrupt. For insurance planning, both conventional and takaful have similar basic principles. The difference between conventional and Islamic insurance is in the type of the product offered. Conventional products are the general, whereas Islamic products are based on Sharia. When a person wants to buy an insurance, whether a conventional or takaful plan, they must understand the policy, including product, features, conditions, benefits, limitations, and exclusion. It is better to have an insurance policy or our emergency backup money that we may face, such as accidents, emergency, surgery fees, flood water, fire, and so on. Moreover, the buyer of the insurance must make sure that the product of the insurance that they want to buy is from a registered or legal company. It would be such a big problem for them if they did not care about the policy that they wanted to buy. That's all from me. Thank you.
First, set your top financial goals. Creating a strategic financial plan is critical. This that clarifies the purpose of the subsequent steps and provide financial guidance. Do you intend to save money for a family vacation next summer? Every type of insurance planning has an advantage. Whatever insurance that person obtains, it will be beneficial to them. Long-term saving can be realized through insurance planning. Several insurance plans, such as life insurance, can be a huge benefit for a family insurance planning. It is based on the planning that the family will undertake, so that they will not suffer if one of the family members dies. And as for general insurance for automobiles, this insurance every motor vehicle user requires. This insurance because if an incident occurs to that individual on the road, it can reduce the burden on the owner of that vehicle while also protecting and covering the person involved.